Hey guys, Mike here. So another interesting day in the market yesterday, and boy was it volatile, boring, all kinds of good stuff, but the OPEX is over. Okay, so we finally got the OPEX behind us. We'll see what this week brings. Again, tomorrow's video set that up. Today we'll focus on your questions, and you have some really good ones concerning Elon Musk, Tesla, a lot of questions about CTAs, what they are, where to find the chart. We'll talk about that one. What's a death cross? That's an important one to understand, and a couple others, on tariffs and things like that. So we'll get right into it. And again, if you have any more questions for next week's video, put them in the bottom. And feel free to participate in this one because I do have a question here that I don't know the answer to. I don't know the process, but it's a very good question. And so hopefully you know the answer and maybe you've done it before. So the first one here comes from Dr. Marcus. I know this is going to light a firestorm in the comments, but it says, let's say you were a serious Tesla shareholder and Elon Musk asked you for a few pieces of advice on what he should do moving forward to improve the stock, his brand, his image. What would you tell him? Feel free to be harsh. Well, he'll never ask me, of course, but if he did, I would just simply say, look, and again, this is me going right down the road, okay? I would simply say, one, you're a CEO. Either you're going to be the CEO of Tesla or you're going to go work for the government. It's not both, okay? That's just, unfortunately, the way it is, right? Like, I'm a parent now. I've been a parent for a while, but, as a parent, I have a duty to my child, right? You don't think I want to get on a plane and, go fly to Egypt one day or something, just out of the blue? Sure, it'd be nice, but I can't do it. There's a lot of things you can't do when you're a parent, right? Because you have that responsibility, and a CEO has responsibilities to their shareholder first and foremost. That's the way it is. And of course, this is a problem because what's happening? Like, people are burning Teslas, vandalizing, which I shouldn't be doing. It's illegal, by the way. Other people are protesting. The numbers, the sales numbers are looking just horrific, like all around the world and stuff. And so not good for the shareholders, right? I mean, they're upset, obviously. And so a lot of them are. And so, yeah, that would be my number one thing. Either you're the CEO or you're not. Unfortunately, for Tesla shareholders, in the way, like, the board is so rigged in his favor, there's no way they'd ever replace him anyway. And like I said before, look, I mean, if you think Elon Musk cares about cars, you got to be crazy. I mean, this dude, I said before, I don't blame you. I've been on record saying this. He's into the rockets at SpaceX. That's where he spends a whole lot of his time, and I don't blame him. Which one's more fun, rockets or EVs? And he's kind of already accomplished his goal with EVs. I mean, the autonomous thing, they're going to start rolling out in Austin. Maybe it works. But come on, really? I mean, the dude's the richest man in the world. You see what he's doing with Twitter right now, right? He'll bring that back public, most likely. He's going to bring SpaceX public, be a trillionaire, all that good stuff. So, this is just something for his legacy. That's all this is. He don't care about me. Why would anybody that owns Tesla stock think he cares about you or the shareholders of Tesla? That makes no sense. I mean, he's never proven that he cares anything about them before. And, one thing, other thing I would tell him was, and this is something he can't help, right? I mean, you understand and you probably met people like this, and he's just one of those folks. Not everybody's like this, but he was born into a wealthy family, right? His dad ran an electrical, mechanical engineering company. They owned a mine in South Africa, I believe it was, worth like $100 million in the 80s. So they had money, right? So he doesn't even understand. He can't even relate, and it's not his fault, to the vast majority of Americans, everyday hardworking Americans, because he never had to do that. He never had to go work at McDonald's, work his way up. He never had to do anything like that, okay? And so for him, that's just kind of the way it is. And so, he has a problem relating to people. And so when he sees this stuff and he goes, oh, and retweets out that stupid tweet about, how people who depend on federal entitlement programs are part of the parasite group. He didn't say that. He retweeted what somebody else was saying, supposedly. And so people got upset about that. And rightfully so, if that is the case, But he doesn't get it, because not like in his mind he was ever going to be going in the military. He doesn't understand, like, people in America, how little people going in the military get paid, right? When I was in, I made $19,627 my first year. At the end, 4 years later, as a sergeant, I still only made like $32,000, right? Teachers, what they make starting out. Cops, what they make starting out. These things we have to have, right? The people picking your crops and working the meat packing plants and working all these restaurants you like to go to washing dishes. Guess what? They probably don't pay any federal taxes for a reason, because they don't make enough money, but they do the jobs that most people don't want to do. So, we've all been there before. Also, elderly people, right? They paid all those taxes coming in. Most of them don't pay any federal taxes at the end when they go to do their taxes, because Social Security isn't a lot of money. If you don't know that, if you depend on Social Security, by the way, only on that for retirement, it's going to be a rough retirement probably. But, I'm just saying, so he doesn't get it. He just sees the numbers and goes, let's cut, whatever it is, or these people are leeches, which is just not true. I mean, that's just not true. The majority of people aren't leeches, okay, or parasites, or whatever word they use. So I'd probably tell him to hire a PR person too, to do the talking, and him and his son can just stay at home and just do the work or whatever. But yeah, that's kind of what I do, and I guess that's harsh, and I'm sure I'll catch flack from the Elon bros and stuff in the comments, but it is what it is. So there you go. So let me know. I mean, what would you tell him? I don't know. If you're a Tesla shareholder, what would you have to say? And how you feeling? Next one here says, where are you getting the CTA chart? This is a popular one. I think like 5 people asked this. Somebody else asked me, my question is, what are the CTAs you keep referring to, and how do they affect the market? It's called Commodity Trade Advisors. They basically go long or short in the futures market for their clients. They manage billions of dollars. This one right here is a Gamma Lab, and so you can pay for that service. Again, I'll give you the Gamma flip line, CTA, COT positioning. But you see CTA in this line right here, right? And you see that they're way short, like way short. Now understand they're trend followers. So these people will not time the bottom, okay? The market will have already turned up by the time they come in because they want to see the trend shift up. And, we'll do an example here. If you look over here, we'll look at the date. You can just hover over the line right there. It'll give you a date. You can see, I think that's August 16th right there. And what we'll do is we'll go to the chart. There's the bottom right there, August 6th. They didn't even start coming in until like August 15th, 16th right there. You see that right there? So again, the trend has a shift up. And of course, what we've been doing since 2020 is V-shaped recoveries. And this line right here, you can see that's the zero line. So when they go below that, they're short the market or short many things, many commodities, things like that. And so you can see they're way down there. I think 50 million, negative 50 million or something is like the most they've ever been. And so, that's what they say when the market shifts up and they start coming back up, they're covering their shorts, right? You can see right here. This is the last time, right? January 16th to January like 25th or something, they were flattening out. Not really buying, just more like covering, going flat right here. And then when you come over to the S&P, you can see we had already recovered up right here. And we're moving up. And so they came in about right here, starting to flatten out. But they didn't even start going into it until right there. And then what happened? We just chopped sideways for like weeks and weeks and then did the big sell-off. And I was telling members, when I was looking at this, I was like, if you look, right here at this one, you see how it's almost like indecision. One, the angle is much more decline, and then it's kind of like, oh, maybe we're buying, not too much. Versus this one, it's just almost straight up vertical, right? And there's no indecision. You can see it, there's no indecision. And so, again, you can see it, and of course, they sold out pretty fast. They were going, once they just got tired of it, the trend wasn't good, boom, sold down. So they never timed the top, and they never timed the bottom. They are following the trend. Okay, so hopefully that helps you guys, and that's going to help the market recover. When they come back in, we'll already know the bottom's already in. Okay, so when we see that turn up, again, they'll follow the trend. So just something I like to track right there. They do manage billions. Next question says, hey Mike, what is a death cross? And this is definitely something to understand, because somebody was talking about NVIDIA's death cross and stuff, and I want you to see this for yourself. I really care about this on the indexes versus the stocks, right? And when you look at this right here, you can see you don't get many of them. But when you get a death cross, it's when the 50 moving average crosses down below the 200 moving average. And you can see the market usually is in turmoil. But right there, what happened? We had a death cross and the market rallied huge. So just because when it happens, don't think, oh man, we're really going down from here. That's not always the case. Right here, when it crossed, what happened? That was the bottom. Okay, we rallied way up. Right here, when it happened, we dropped off even more. Okay, so I care about these more on like indexes, and when we scroll back, you'll see it doesn't happen that much on indexes. That's why I care about the indexes more than the stocks, because I'll show you a couple of stocks, and you'll say, wow, that might be a lot of death crosses, and I'll show you where death crosses have happened, and then of course you have these huge rallies. So don't be like, oh, I'm going all in puts. Now there's a death cross on NVIDIA. That might be the case, might not, and you can see right there when we come over to NVIDIA, you can see, right, confirmed death cross right there. What's the stock doing? Is it falling off a cliff? No, it's just still holding up ever since that happened. And again, when you look at this on a higher time frame, this is why you're getting the death cross, because you have nothing but lower lows and lower highs. That's all you have in the higher time frames. It's on the shorter time frames, which end up making out the higher time frame later on. They're just trying to build higher lows and higher highs and things of that nature. And a prime example of this is like MU, for example. When it comes to death crosses, look at when MU had a death cross, what happened? Ends up having this death cross, what happens? The stock ends up rallying 28%, and then from there just goes sideways, right? Didn't crash down. Okay, so that's what I'm talking about. When you're looking at stocks, just be careful, right? When you're looking at that, if you're trying to make a decision just off a death cross, you need to take a lot more into consideration. And when it crosses back up, the 50 crosses back up above 200, it is a golden cross, okay? Which MU still is not had on the daily. Here's another one where it did cross, and guess what? Sold off some more. right? Actually, it rallied right when the death cross happened, but then it sold off some more. Here I had another one that was 2022, ended up selling off, right? So definitely just take a lot more in consideration than just the death cross, but really pay attention to these on the indexes. Now, next one is a long one. It says, question, other than uncertainty, how will the reciprocal tariffs be negative to the market if other countries back off and come down on tariffing us or do away with tariffs? Then boom, market goes up, correct? That's correct. If other countries keep their tariffs on us and we match them and tariff it back to them, then what? I'll talk about that. Our big companies pay the tariff, and if I understand it correctly and pass it on to the consumer, and the consumer will decide if they want to spend blah, blah, blah. A lot of us in America have been doing this for years. Paycheck only goes so far and people will spend according. We used to grill steak every weekend. Nope, not anymore. Can't remember the last time I grilled a steak. And so, yes, what possibly could happen, obviously, if they bend the knee, right? Europe, Canada says, okay, we'll lower our tariffs and then we don't do anything reciprocal. Well, of course, the market's going, that's fantastic, right? That's great for growth, I guess, right? Because we're in this growth scare, right? And so, but if they don't, and we end up whatever their tax, I don't even know what EU charges, I don't know what Canada charges either, but they're saying if it's reciprocal, we're just going to raise ours to where theirs are at. Okay, so yes, that means stuff here will be more expensive. It'll, and plus what also to do, if that's the case, the Fed will definitely most likely hold off on cutting any rates because they got to see how it's going to pan out with inflation, right? Because it's stuck at like 3 now. And so if goods are going up temporarily, that means inflation readings should start to stall out again or go up. And so even Jerome Powell even said that, right? So that's a problem. The other one is for the companies, right? They're going to figure this out supply chain logistics wise, right? Because the reason why they're talking these tariffs, they want people to make stuff in this country. That's what the president and administration wants. And so it takes time to build factories. It's just a lot of uncertainty, right? So they got to figure the supply chain stuff out as well. And then you'll hear them on the earnings calls. I mean, if this takes place, we're going to hear the earnings calls saying, well, the ones that report, if anybody's reporting even before all this stuff gets washed out, it'd be interesting to hear what they got to say. But if it's actually in place and we've done reciprocal tariffs and they've retaliated and all that stuff, we'll get to hear the companies try to figure this out and be like, how do you forecast? Because they're trying to forecast, the whole year. And so now all of a sudden you get this extra bill that you're trying to pass on consumers. But when you pass on consumers, what happens? The real big fear is the consumers do exactly what you just said. They close their pocketbook or they start going to different options, right? Like, I'm not doing steak anymore. I do hot dogs now. Okay, so that's what the deal with the trade war is. Okay, again, we'll see how it works out. So next news says, hey, Mike, why is there a lot of volume and a crazy candle for pre-market anyway? Exactly at 8 a.m. It's weird what happens at 8 a.m. I have no idea what happens at 8 a.m. I've never seen a crazy candle at 8 a.m. I've seen it at 8:30. That's for sure. And that's the 8:30 news candle. This is when CPI, PPI, unemployment numbers, all that stuff usually comes out at 8:30. You see this big spike up. Usually there's a wick on both ends a lot of times. This is a very powerful candle, so make sure you pay close attention to it because I'll share this. I actually gave this to members the other day, and I've talked about this for 2 years. But again, when you look at this, you'll be surprised how powerful this candle is. If you mark this out, just to show you this. Okay, here's the white line, right? Because we took out the bottom. You're going to take out one side or the other. So we took out the bottom. We didn't take out the top. That's actually not that common. But watch this right here. It's a magnet, man. See what happens here? Boom. Ended up rejecting multiple times off of it. And we can come back a couple of days later. You can come back the next day, a couple of days later, whatever. And all of a sudden, look at it. Now it becomes support. So it creates this almost like draw on this, right, where it becomes support. So it creates this level, and it's a very powerful level. You can see we're still going across days later, right, sucking back up, coming back into this thing. And so mark that out because eventually we're going to take it. It's going to be a draw. That's the way it is. I showed in Thursday's video how the 2 o'clock candle was a draw in pre-market stuff during futures, right? Another one getting rejected. So again, mark that one out on both sides. Usually you'll get both sides taken, but if you get like one side taken real fast, watch for it to move up in the same day to take out the other side. It's just liquidity on both sides of this, but it becomes a magnet. And you have not only look at ES, look at NQ because one of them is going to take it. All right, and so if you see ES bouncing off of it exactly rejecting, I'll guarantee you NQ took it on this chart. Mark my words on that. So again, play around with it, check it out. Now, next thing it says, for Saturday's video, can you explain what it means to reduce the Fed balance sheet? Does this mean they are selling less treasuries? It means they're rolling less treasuries off now, but literally this is the Fed balance sheet. You can find it in TradingView or however you want to look at it on Fred's, the website. And when you look at it, this is when, after 08, they took over the stock market. It's why the stock market had been doing so well or did so well because they just ballooned this thing from $1 trillion up to $9 trillion. And so what happens is after they got done, pouring liquidity in after '08, they rolled it off a little bit, which means they let treasuries, mortgage-backed securities, bonds just mature and just roll right off the balance sheet without replacing them, i.e. reducing the balance sheet, right? And so that's supposed to drain liquidity from the market, which they need to do, help with inflation, that kind of stuff. That's the whole purpose in actually doing this. And so now they've reduced it. They reduced it 50% last year, what they were rolling off, and now they went from 25 billion to 5 billion on the bonds and treasuries, kept the mortgage-backed securities the same, okay? And so that's the way it works. We never get back down to the prior level. It's not going to happen. And again, now they reduce this to 5 billion. I won't be surprised in the next, 6 to 12 months if they just stop rolling off completely until the next crisis happens. That gives them more room to pump more liquidity into the market. So that's what that means. Hopefully that helps and stuff. Now, last one here says, I always hear about how bigwigs avoid taxes by borrowing against their stocks. For us little guys, is this possible? And how would somebody do that? Do I just go to my bank and show them my portfolio and apply for a loan? Do I go through my brokerages? Is there a minimum stock value for banks to even consider this? Thanks for everything, brother. And that's a good question. I don't know if you've done it before, and let us know. I mean, what he's talking about is, like, Elon Musk, since somebody asked about him, and him and many other CEOs, what they do, or executives, they'll borrow against the company's stock, right, and take out low interest loans, and so that way they avoid taxes, okay? The other one, for most folks, is called invest, borrow against, and then die, okay? So they invest in, real estate, stocks, bonds, all that fun stuff, and then they borrow against those assets, okay? And then they just die and leave it to their kids, and that way they avoid capital gains tax. They don't have to sell it. And so that's how they do it and stuff. But again, I know how to borrow against real estate. I've never borrowed against stocks and bond portfolios. So if you've done it, let me know. Of course, if you're an executive, you know exactly how to do it because they do it all the time. So just another way to avoid taxes. And so if you've done it, please put in the bottom. I'm very curious to see how it worked out and everything and what interest rates you're getting there and stuff. I assume it's a lot more promising back in the day, but it's still probably a lot lower than capital gains tax and everything else, and having to pull a paycheck and pay the FICA and all the state and federal taxes too. So anyway, hit that like and subscribe button for me, guys. Really appreciate it. Think about putting any more questions down for next week's video. Also think about signing up for the membership. Less than a McDonald's combo. That's everything you get with it. And I will see you guys tomorrow to set up the week.